equity, mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome back to another episode of Equity Mates, a podcast where we explore what is possible in the world of investing. If you've just joined us for the very first time, a massive welcome to the community. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. What's up?
What's up, dude? Wow, that threw me. What is up? Well, we are halfway through our winter series.
Yeah.
Absolutely loving some of the companies we're talking about. Feeling very inspired about the quality of Australian businesses that are really taking on the world. You know, we've spoken about Catapult, who are truly like a global leader in what they're doing. Spoken about Drone Shield. Arguable if they're truly an Australian company, founded in America by Americans, but we'll claim them. And they're truly like world leading at what they do. And we're just continuing the Aussies taking on the world party today because we're talking about another company started in Australia, taking on the world and leading the world at what they do. And that is Audinate.
Yes, the ticker is AD8, listed on the ASX. And as always, we're going to be joined by an expert in the second half of this to unpack the investment case. And that is Ben Richards, investment analyst at Seneca Financial Solutions.
Before we do, we want to say a massive thank you to our sponsor for this series, Superhero. Without them, this winter series wouldn't be possible.
Superhero Super is a low-fee, award-winning super fund with a wide range of investment options and the flex to invest directly into ASX-listed shares, ETFs, and more. Superhero Super is primed for performance. They were recently crowned winner of excellent rates and fees, best for direct investment, and runner-up for retail superannuation fund of the year at the We Money's 2024 Superannuation Awards. Remember, Superhero does not provide financial advice, so consider whether their product is right for you. Superhero Super is a sub-plan of One Super, which is issued by Diversa Trustees Limited as trustee. Read their PDS and TMD and download the Superhero app at superhero.com.au.
A reminder that on Wednesday, the 10th of July, we are coming to Melbourne to do a live podcast. We cannot wait. The evening is going to be highlighted by a live Pimp My Portfolio session where Ren and I will be going through our portfolios, every single position with Luke Larrative to get his thoughts on how we might be able to improve our portfolios, just like we do it with community members on the show. So if you want to see what is in our portfolios and see if Luke can roast us, then come and join us at our live event in Melbourne. We're also doing an Ask an Advisor session as part of it where we'll be bringing in Dylan, one of our advisors, where you can answer all of your questions from the night, as well as we'll be unpacking the news headlines just like we normally do on the show. So come and join us. It's Wednesday the 10th of July. Tickets are available at equitymates.com/events. I think there's only about 20% left or so. So make sure you grab one. We cannot wait to see you there. All right, Ren, well, where do we want to start with this company?
All right, well, let me start with a quote from Audinate's Chief Technology Officer, Aidan Williams.
Yeah.
Quote, I was constantly connecting my synth to a mixer, to a sound card, MIDI cables, all sorts of different connections. To me, it seemed like a networking problem. Why make all these different connections when you could integrate it into a single network?
That's it. One network to rule them all.
One cable to rule them all.
And that is the founding story of Audinate, a company founded in 2003. They're in the IT sector, focusing on AV, audio-visual industry. Essentially, in a nutshell, they make audio easier and more flexible. That is from their website. Target customers, live sound events, those huge stadium events, recording studios, broadcast studios, PA system, corporate events, anything where there is a large amount of cables and connections pumping out audio visuals. That's their target market. They're now the dominant player in the industry, making it seamless, but just as effective.
Yeah, and I think what we're going to get to when you talk about there being a dominant player is they're becoming almost industry standard.
Definitely.
And becoming integrated in audio hardware.
Absolutely.
Essentially. Like they're the software that is now being integrated with hardware. In the same way that like Roku worked really hard to become integrated in a lot of consumer TVs and stuff like that. Audinate have done a pretty good job with Dante, their flagship software, doing the same thing. But anyway, that's jumping a little bit ahead. Let's go back to their history because they were founded over 20 years ago.
Over 20 years ago, yeah. 2003 was where the company kicked off here in Sydney, where a small team of engineers were designing new technologies for Motorola research labs. Motorola then shut the facility in 2003, but a few members of the team stayed together, securing backing from the National Information and Communications Technology of Australia, which is a government research institute, where the goal is to spawn innovative technology to benefit the growth of industry in Australia. So this came out of a research lab. In 2006, it then became obvious that there was something in what they were doing. So NICTA spun the company out to commercialize it. And this is a story we hear on the Uncovered series that we do, starting in research labs in unis, and then they spin out to commercialize. So 2006, it spun out to commercialize this product. In 2008, they then opened a US headquarters, and from there, it's just been a story of growth and expansion. 2010 and 11, they opened businesses in Europe, and then they really started to integrate their main product, which Ren spoke about, called Dante, at a global scale. So they had integration in the 2010 Winter Olympics in Vancouver. They were involved in the Pope's appearance in the Sydney World Youth Day, the Queen's Jubilee concert in London, and this is where they really started to establish themselves as industry players, industry standard, global events where you can't have AV stuffing up, essentially. And there'd be so much going into it that these guys just simplify that whole process. 2015, over 250 companies signed license agreements. And then in 2017, they IPO'd. And again, from there, it's just been a story of growth.
It has been an incredible share market performance, and one that we often kick ourselves for not getting on.
Yes.
It's 10 bagged since IPO in 2017.
Yeah.
So you would have made 10 times your money.
Yeah.
And that is despite it falling pretty heavily, really, since sort of March this year. It's down almost 20%. Maybe a buying opportunity.
Maybe.
Not financial advice. Before then, it was up almost 1,500%. That fall, so it's fallen, call it 20%, still leaves it with a price to earnings of 92.
Oh, wow.
Yeah, so this is a company that
a lot of expectation.
The market is certainly aware of and is willing to pay for. So it needs a lot of growth. It's valued at about $1.5 billion today, so not massive by global technology standards. But yeah, as I said, its price to earnings is expensive. To give you a sense of its financials over the years, sort of the last 4 years, let's look at, it's gone from 30 mil to 33 mil to 46 mil to 69 mil. So it's accelerating, I think, is the takeaway. And it sort of fluctuates between profit and not profit, profit and loss.
Yes.
In the 2023 financial year, it made $10 million in profit, but the 3 years before that, it wasn't profitable. Lost 5, then lost 3, then lost 4. But the 2 years before that, 2018 and 2019, it was profitable. So yeah, it's obviously growing fast, it's investing in growth, and it's oscillating between profit and loss. But as long as that revenue is growing, hopefully it can keep growing into its lofty valuations.
Yeah, well, I think if you at the moment, they've really nailed the audio component, which is essentially high quality audio through, existing computer networks, Ethernet cable,
Ethernet
whatever.
cables, yeah.
And so reducing the need for heaps and heaps of different cables. I think where the future is with this, and we'll speak about it with our expert, is they're now wanting to do the same for video. And so if you want to send high quality video, you can imagine the quality requirements on video these days. Yeah, I mean, there's going to be cables everywhere.
I guess so, yeah. Honestly, this chat makes me nervous.
Why?
Because it's a completely different technology set and industry. Like, obviously, there are adjacencies, and obviously, sometimes the customer is the same. Like, large-scale concerts, your customer base isn't massive. So I get all that. I get all the adjacencies and the synergies. But you have a different competitive set. And like without understanding the technology well enough, I'm kind of flying blind. But there's just echoes of business history where like a company has like a really strong core competency and then tries to push into an adjacent market and burns a lot of cash doing it.
Yeah.
And that would be my concern as an Audinate shareholder, that like is audio fully maxed out? Is there more they can do in that space? Can they just kill this market? Or do they need to move to an adjacency because the audio market is fully tapped and it's not big enough?
Yeah. I think for there's no indication reading any of their reports that they feel like they've tapped audio. So I think from that point of view, they see plenty of opportunities. But I think it's kind of like the problem. I completely understand what you're saying, but you can understand from their point of view as well. It's like the problem exists that we've managed to solve.
Yeah, 100%,
How can we try and move into that adjacency?
And there's obviously synergies if Dante, this software system, can control all the audio and video channels. Don't get me wrong, I see it. And the counter argument is that there's heaps of businesses that have moved to an adjacent opportunity and done really well.
Yeah.
So they're both sides of the argument, but that's just for me. It's like, I wouldn't assume that it's just like linear growth into video. No. It's like you are attacking a new opportunity.
Yeah.
Yeah.
Well, I'm interested to speak to our expert about the case for video and whether or not it does form a part of the bull case.
This series is proudly supported by Superhero Super. We wanted to tailor our super our way, and Superhero Super provided that flexibility. With a wide range of investment options, you can invest in professionally managed, balanced growth and high growth portfolios, or you can add a range of ASX listed shares and ETFs. Recently crowned winner of excellent rates and fees and best for direct investment and runner-up for retail superannuation fund of the year at the WE Money's 2024 Superannuation Awards, Superhero Super is a low-fee, award-winning super fund. Remember, Superhero does not provide financial advice, so consider whether their product is right for you. Investment limits apply. Superhero Super is a subplan of One Super, which is issued by Diversa Trustees Limited as trustee. Read their PDS and TMD and download the Superhero app at superhero.com.au.
Welcome back to Equity Mates Investing. We are here doing a deep dive on Audinate. And as always, we're bringing in an expert to talk about the investment case. So it is our pleasure to welcome Ben Richards, investment analyst at Seneca Financial Solutions, to Equity Mates. Ben, welcome.
Gentlemen, thanks for having me on the show.
Absolute pleasure. Now, we want to kick off with how to analyze a company like Audinate. Ren and I have spoken about the revenue side of things and its profitability. But talk us through how you look at analyzing a company like Audinate.
I mean, Audinate's got this kind of reputation of being a high-quality business, of which there's probably not that many on the ASX in terms of high-quality tech businesses. So I suppose I want to start off by just saying the old Peter Lynch quote, which is know what you own and why you own it. This is a complex business. It's taken me kind of a couple of years of looking into this company to really get my head around it. Just make sure you kind of across the business, which I'm sure you guys have given a good introduction there. But I suppose in terms of what they do and how that's a high-quality business, they are really embedded in this audio-visual networking stack. They make these Dante chips that transmit sound signals via fiber optic cables, so Ethernet cables, rather than the old analog copper cables. And so that sounds like some high-tech stuff, right? Especially for a small cap ASX company. But it's only really a small component of that. And that's going into, sound systems, venues, stadiums, those kind of things. So pretty big market is the other point to note. And in terms of how to analyze this company, you've really got to put your finger up in the air and sort of figure out what's the total addressable market, what's the realistic market penetration they can achieve, and what would the revenue and profit look like? Because the historical financials aren't going to be as good of a gauge on this company. It's been sort of break even-ish for the last few years. So to get a true understanding of profitability, you've kind of got to do those calculations and assumptions and see what comes out. In terms of market penetration, the key input there is how much of the market are they taking in any given year? Are they the de facto standard? And the key for Audinate is they say they are. I think they are. The investment community has seemed to come to a consensus that they are the go-to player. I think the company might have even mentioned a couple of years ago that they have sort of 5 to 6 times the adoption of the nearest competitor. So in a business where audio standards are kind of pretty similar across the big venues and stadiums, it's moving from analog to digital. Audinate's realistically going to pick up quite a bit of share there, just because, in terms of the benefits of digital versus analog, it's kind of the same in terms of across the economy. It's obviously got a lot of benefits in terms of this digital transition. But particularly here, it's kind of things like reliability, optionality in terms of what you can do with the sound, differentiation, that kind of stuff. Audinate's got the lowest latency and the fastest tech. So that's kind of the core assumptions that you've got to make to be able to plot out that market penetration and come to an end sort of revenue and profit figure for Audinate.
The big challenge I have when thinking about a business like Audinate is you're almost analysing two separate opportunities. The first is the audio opportunity where they've got hundreds of license agreements and they kind of feel like they're the de facto for a lot of the industry, and then you're trying to figure out, well, how big is that and how profitable can that be over time? But then there's also this video opportunity that they're talking about and they seem to be pushing into, where it's an adjacent market, but it's a different market, different tech, different players. So how do you then analyze, I guess, a company with a really established franchise and then also this sort of like optionality that may have some value but is a little bit more unrealized? How do you analyze that part of it as well?
Yeah, I think that's where the real money's made in figuring out what that optionality is worth. As you said, kind of as they've started to dominate the audio segment, they do have that optionality in applying that to video. It actually reminds me of kind of similar businesses that we've analysed in terms of how the market sentiment is split, like a PEXA. PEXA is a digital property settlements exchange where they've dominated Australia. They're pushing into the UK. The market's sort of seeing losses there and not liking them. But as soon as we start to see traction there, then you get the real re-rate. And I think Audinate's similar. So not only in the video, but also they're kind of tacking on some software, Dante controller, I think it's called, which links to their hardware. Yeah, it's kind of high margin revenue that adds to the blue sky. The video market is obviously large, probably a lot larger than the audio market, but it's really hard to say where that will end up. And that's probably leads to the disparity in terms of the bull case and the bear case.
Well, Ben, what does your bull case look like if you start attempting to try and map out the projections of at least audio and potentially the video opportunity? What does your bull case say?
Yeah, I think it's kind of the gold standard for any business to be the de facto player and embedded in a kind of a growing market. Just to draw another business parallel, if you look at something like a Pro Medicus, that's kind of the de facto standard in the radiography world. It's high margin, and now that it's sort of dominated the space and generated these network effects, its earnings growth has been phenomenal, and it gets a multiple valuation that treats it accordingly. When you look at Audinate, you're looking at a business that's done 30% revenue CAGR over the last few years, and it looks like it's continuing to grow strongly. That should drop through to profitability. So although it's been kind of break even, as you start to see, not only continued growth, but things like pricing power, additional high margin sources of revenue, be it software or video. And that's when you sort of see the compounding effect, especially given that it's sort of embedded in that stack. So as the market keeps growing, you get the double lever of upside. So I suppose the bull case is you can really foresee, a long growth runway for a company like this. And given how scarce they are, you're going to get a multiple that's pretty attractive and punchy.
Let's talk about the bear case. And I imagine it starts with the multiple and the valuation currently. I think it's like trading at 95 times earnings. It is growing, but talk about the bear case, both from a valuation point of view and then I guess more like a business risk point of view as well.
Yeah, so the bear case is where I think it gets really interesting here. We actually, myself and my colleague Luke Larrative, who's of Pimp My Portfolio and other Equity Mates fame. So we wrote up this company alongside a couple of other companies on Livewire. Incidentally, the day before the all-time high of the Audinate share price. So you can read into that what you will. But
did you write it up bullishly or bearishly?
Bearishly on the whole.
Okay, so the market's reading Livewire and listening.
That's it. It's now trading about $18. But having said that, I won't attribute it to Seneca's great success entirely. I think there was a couple of other factors in there. It had just reported a result, which I want to touch on in the bear case. That result was really good. It showed profitability, and the market's kind of extrapolated that and re-rated the share price, thinking it's hit profitability, it's going to keep growing, and profits are going to increase pretty rapidly from here. The bear case is what's priced in. What are we paying if we're buying shares today? And at the time we wrote up that article, so bearing in mind it was a slightly higher share price, but it's going to be roughly the same. The stock is trading on 100 times FY25 EV to EBITDA. So that's a really, optimistic share price assumption. That's kind of factoring in at least high 20s, probably 30% sales compound annual growth rate for 5 or 6 years. And if you look at the history of companies on the ASX, even these really high quality companies like your Pro Medicus, your WiseTechs, and they're kind of pure software players, but it's really rare to achieve that kind of thing. So that's kind of the valuation piece. And I'll probably just point out a couple of other bear points, just so you kind of listeners are aware of what's going on out there in the market for Audinate shares. They got included in the ASX 200 in the March rebalance. The ASX 200 is the flagship index. It has a lot of money flows associated with it, and it creates a lot of artificial buying once it gets included. So I think that kind of helped the share price, around the time of that result as well. And probably two other things. One is that insiders have been sellers of the stock, not buyers, in the last couple of years, including last year they did a capital raise. Insiders were selling prior to that capital raise. The capital raise kind of raised some questions with the market. It didn't really have a clear purpose associated with it. It's just kind of to shore up the balance sheet, which is, a little bit surprising when you should be hitting profitable growth and not needing to raise any more money. So that's another one to consider there. I suppose the other thing is just sentiment. So the share price kind of went from maybe $10 to down to $6 in 2022. In a previous role, we were actually looking at the stock then as a potential buying opportunity. I think we bought a little bit, but sold it long short of today's prices. But that was when the stock was in the toilet in terms of sentiment, whereas, it's re-rated massively as the market's kind of recovered in terms of sentiment in the tech sector. You start to get everyone talking about it. Fund managers are talking about it. They're usually kind of late to the party. And I would argue these ETF providers are even later to the party when it comes to these small cap emerging growth businesses. So I think you've just got to have a balanced view in summary. Like, I actually do think it's a high quality company and one that I would happily own. But just given the valuation and a couple of other little factors, it's probably not for me at today's prices.
Love that. Yeah, very, very clear analysis there. So to close out, Ben, with all of that in mind, optimistically, where do you think, well, I mean, you could also say bear case, it might be down the toilet in 10 years, but if they were to be successful and you were to map out growth in video and they continue to build market share in audio as well, what do you think success looks like, or what would you be expecting to see in sort of 10 years' time?
Yeah, I think probably video is key in terms of the long-term success of this business. But, the core engine being still audio, you'd want to see continued market penetration. So, things we look for there is kind of, the peers or the higher up the supply chain. So given that these guys are involved with OEMs like a Yamaha and a Boss and those big players, the publicly listed ones publish their numbers. You can kind of see whether sales are going up or down, and by association, Audinate's, products within them. So look, there's little metrics you can track to maintain the conviction that the longer term story is still on track. If it is to be still on track, I think this is a good compounding business that can grow at double-digit rates for the next 5, maybe 10 years. I mean, I'm always reticent to make 10-year predictions.
Yeah.
Who knows where we'll all be in 10 years? Just in business, there's so many moving parts and uncertainties. But this is a high-quality business in my view. Yeah, holding it long term, you could get some good growth rates, but just got to make sure that you're being compensated by buying at today's stock price valuation.
Yeah, or it could grow massively over the next few years, but also re-rate down and the share price might not move.
Yeah. I mean, the other thing as well, when you're talking about these disruptive technologies, like it's come from somewhere, it's already disrupted the kind of the previous industry standard. And in 10 years, what's the new industry standard going to be?
Yeah, like the idea that they run on, Ethernet cords rather than the old cords, but like maybe it'll be cordless. Like,
yeah.
Exactly. Yeah. Who knows? But
Bluetooth, the ultimate bear case.
That's the nature of investing, isn't it?
Yeah, that's it. Well, Ben, a massive thank you for joining us today. Appreciate your insight, and I'm sure we'll speak to you again.
Thanks, Bryce. Ren, good to be here.
We want to say a huge thanks to our friends at Superhero for supporting this series. Superhero Super has given us the control that we want to manage our super. Superhero Super is primed for performance with a wide range of investment options, including professionally managed portfolios, thematic, and direct investments accessible in an intuitive app. Download Superhero's easy-to-use app and start tailoring your super today. Remember, Superhero does not provide financial advice, so consider whether their product is right for you. Superhero Super is a sub-plan of One Super and is issued by Diversa Trustee Limited as trustee. Read the PDS and TMD and download the Superhero app at superhero.com.au.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.